Now, another company reporting results that came earlier this morning, Wells Fargo, the bank boosting its expectations in terms of cutting expenses. Let's join the company's chief financial officer, Timothy Sloan, now. He joins us from San Francisco to give us more details about Wells Fargo. Mr. Sloan, good to have you with us on Bloomberg. A lot of the attention today is focused on your plan to cut costs. Specifically, what are you trying to do? Where are you trying to rein in the expense?
Well, Pimm, what we're trying to do is make sure that our team members are working as productively as they can with our customers. So our expense focus is really to make sure that we're operating the company efficiently and we're driving as much revenue as we can to the bottom line. But again, our business is not about cutting expenses. Our business is about growing revenue, and that's what we're also able to accomplish this quarter.
Tell us a little bit about loan loss reserves. How are they doing at Wells Fargo? Because that has been part of the contention of investors worrying about loan loss reserves. You take those down, of course, that's good. But what does that say about future business?
Well, there's no question that the credit cycle is improving a significant amount. Our loan losses were down $372 million from the first quarter. We released $1 billion of excess loan loss reserve. And what it tells us is that the economy continues to improve. It's not improving as quickly as everybody would like. But again, that's also telling, we also see that as with the fact that we're driving revenue. We saw loan growth quarter over quarter, and we saw deposit growth quarter over quarter.
Timothy Sloan, can you tell us about capital? What kind of capital you're retaining? Because that's been a debate not only among banks in the United States, but overseas, new capital requirements. Do you really need to hold all that capital? What would you say to regulators?
Well, we continue to have a very good dialogue with our regulators. There's a lot of focus and discussion going on right now about the appropriate capital levels for large financial institutions. There was some more news on that today. Wells Fargo has always operated with high capital levels, and we'll continue to operate at appropriate capital levels. That's what's got us through the downturn and allowed us to be in the position to be able to merge with Wachovia, which has gone very well.
Timothy Sloan, mortgage losses. Give us an update for Wells Fargo. And do you think that there's a time we're going to be able to draw a line underneath those events?
Well, our mortgage portfolio continues to improve. If you look at the servicing portfolio, our delinquencies and foreclosure rates are down 20% from the peak. Our portfolio is different than our other big bank peers, and so we continue to see improvement. We love the mortgage business. We originate 1 out of every 4 mortgages in the country. What we saw this quarter was originations stabilizing a bit, and we think that we're in a pretty good place right now in terms of mortgage originations.
All right, I want to thank you very much, Chief Financial Officer of Wells Fargo, Timothy Sloan.